This is the Asia Trade. I'm Heidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Nvidia's upbeat earnings and outlook for its Blackwell chips may help reignite the AI rally. Shares fluctuating in late trade as investors also watch an ETF tracking the Nasdaq 100. Qantas to pay its first post-pandemic dividend as investors reap the rewards of the carrier's recovery and strong demand for air travel. Plus, President Trump stokes confusion over his tariff plans with seemingly contradictory answers on their scope and timing. Let's get straight to our top story this morning. Nvidia giving an upbeat view when it comes to that Blackwell lineup, helping reassure investors after delivering good but not great quarterly numbers. The company got $11 billion of revenue from Blackwell in the fourth quarter and described it as the fastest product ramp up in its history. So that positive outlook comes at a pretty shaky time for the AI space, right? Concerns that data center operators will slow spending. China's DeepSeek also sparking views that chatbots can be developed more cheaply, potentially reducing the need for Nvidia's powerful chips. Nvidia says sales will be about $43 billion in the fiscal first quarter. Analysts had estimated $42.3 billion on average. Though the company's fiscal fourth quarter sales topped estimates, it was by the smallest margin since February 2023. And let's take a look at what we're watching when it comes to that market reaction. We did see that stock really just fluctuating as investors really try and pass through what the implications are for the broader AI and chip-related rally, right? We saw the shares rising after hours trading. There was a bullish revenue forecast there, but still some uncertainty when it comes to the broader landscape. We are seeing S&P futures up by just about 0.1% there as the S&P ended Wednesday. Kind of little change. We had an intraday advance that was erased by the end. The Nasdaq 100 managing to eke out a 0.2% gain. We're seeing some upside at the moment as well. Watching New York crude there at the moment as well. We're seeing about 0.25% to the upside trading in WTI, but we did see earlier in the session dipping just to that new 2025 low in prices on account really of this trade tariff blitz that we had from President Trump in those comments as well. A lot of uncertainty when it comes to weakness in demand as well as the supply side. Risks as well. Take a look at how we're setting up amidst all of this when it comes to the Asian session. Obviously, the AI and chip-related and tech names will be front and centre today, but we are expected to see sort of broadly muted to softer trading today. The ASX 100, 200, I should say, just coming online. We're about 3 minutes into the start of staggered trading, looking pretty flat at the moment. Equity futures for Japan as well as Hong Kong all looking a little bit softer today. Dollar yen seeing that sort of further strength to that 148. Just over that 148 level as well, as we continue to see a little bit of volatility when it comes to the US dollar. The dollar gauge really oscillating between small declines, some gains on Wednesday as we reacted to those tariff comments from President Trump that Canada and Mexico, those tariffs will take effect on April 2nd. Well, Trump has given a series of apparently contradictory answers when it comes to his plans on these tariffs. During a cabinet meeting, he was asked if he planned to move forward when it comes to levies against Canada and Mexico next month.
Mr. President, can you clarify the Canada-Mexico tariffs? You had put that 30-day pause, but you just referred to April.
25%.
25%. When does it go into effect?
April 2nd.
April 2nd for Canada-Mexico.
Correct. And for everything.
And then the White House later clarified the deadline for those tariffs remains set for March 4th. So let's bring our Bloomberg national security reporter Daniel Flatley for more. So the uncertainty is certainly not helping sort of clarity for the markets. What do we know at this point?
Right. So at this point, what we know is basically, Trump has given a couple of different answers as to when these Canada-Mexico tariffs will go into effect. Essentially, what we had been expecting before today was that next week sometime, likely on March 4th, this 30-day pause would terminate and that these tariffs on Canada and Mexico of 25% each would go into effect. That seems to be somewhat up for debate at the moment, with Trump suggesting that that date could be pushed out another month, although he also said that those tariffs were on track to be implemented. His Commerce Secretary, Howard Lutnick, suggested that if Canada and Mexico continue to meet some of the demands that the Trump administration, or all of the demands that the Trump administration has imposed upon them for the fentanyl trafficking and other illegal drugs and things that are coming into the United States, or that they say are coming into the United States, if Canada and Mexico continue to deliver on those demands, that those tariffs could be paused again. So we would have another month-long pause. Certainly, there's a question as to whether this is all a negotiating position, and all this stuff is very fluid at the moment. But the one thing to keep in mind is that the April 2nd date that Trump mentioned is when we're expecting some reports out of the Commerce Department and out of the U.S. Trade Representative about some additional tariffs on potentially autos out of the European Union, or these reciprocal tariffs that Trump has talked about. So clear as mud at the moment.
Also, lots of movement when it comes to some of these other policy plans, right? Planning to end the license for Chevron in Venezuela is one of them.
Yes, absolutely. So this is something that Trump put out on Truth Social, where he talked about essentially rescinding some of the general licenses and some of the infrastructure around Venezuela's sanctions that allowed U.S. companies and other companies, oil companies, gas companies, to go in and basically maintain operations, potentially develop more drilling, more production there. He essentially has said that will go away. I think the date that he said was March 1st or thereabouts. So, this is not a huge surprise. Trump, in his first term, was very hawkish on Venezuela. And I think that a lot of folks in the space have been sort of watching for this. But the fact that it sort of came out in this way on social media was a bit different in terms of a policy announcement. And so we're still sorting through some of the details of that. But is it a negotiating tactic? Is it something that is going to eventually go through, over the weekend? That remains to be seen.
A lot of action on Truth Social, of course, that pretty inflammatory video, the AI video on Gaza, that, a lot of onlookers are sort of trying to process at the moment as well as now comments about Taiwan and the potential of that security alliance there.
Yeah, so President Trump was asked during this cabinet meeting. Just to keep in mind, this cabinet meeting with the press availability went on for almost an hour, potentially even a little bit more than an hour, and he was talking about a lot of different things. But one of the things that he was asked was, would the U.S. defend Taiwan if there were some type of invasion or other action by China? And basically what he said was, I don't talk about that. I don't talk about that in public. I might discuss it in private with my cabinet members and my advisors, but that's something that I'm very careful on. That is actually longstanding U.S. policy. The U.S. has this policy of strategic ambiguity toward Taiwan. But Trump's comments today were a little bit different than what former President Joe Biden has said in a couple of different interviews, where he did explicitly say that the U.S. would defend Taiwan. So, his administration, Biden's administration, did have to walk some of those comments back. So we're basically kind of at status quo here. But it is interesting that it came up, and it is interesting, that Trump responded in the way that he did.
Bloomberg national security reporter Daniel Flatley there. And Bloomberg has learned that China plans to start recapitalizing 3 of its biggest banks in coming months, injecting at least $55 billion of fresh funds. Let's bring in our China correspondent, Min Lo, who joins us from Hong Kong. So what do we know, and what's sort of the background in terms of what's led to this decision?
Yes, so this is according to our sources. We are hearing that authorities are looking to inject up to 400 billion yuan in capital to the first batch of these 6 important state banks. The first 3 to get the capital injection include BOCOM, the Agricultural Bank of China, as well as the Postal Savings Bank of China. And this was first flagged by China's banking regulator back in September last year, that the government was planning to inject or replenish the core Tier 1 capital of these big big banks as much as 1 trillion yuan in total. The question is why they are doing this now, because in fact all of these big state banks have capital levels that are far above the minimum requirement of 8.5%. But there you can see on the screen that we're seeing a higher rising level of bad debt and profit margins that are getting very low, at record lows in fact. And that's because many of these banks have time and again been called to carry out national service by providing cheap loans to risky borrowers such as real estate developers or the cash-strapped local government financing vehicles, for example. And our own banking analyst Francis Chan is saying that this capital injection could signal that these banks are once again being asked to take on more credit risk. And the fact that these accumulation of these illiquid assets is actually not very healthy for the banks, especially when they are big state banks that often could act as shock absorbers for the entire banking system to provide liquidity backstops, sometimes bailing out the smaller banks, especially when thousands of these rural and regional banks have been struggling. And there you can see that chart there, most of these banks having capital levels above that 8.5%, most of them ranging from 10 to 14%.
We're also hearing that President Xi is urging officials to remain calm as we see sort of various ratcheting up of pressure points by Washington on China.
Yeah, so this is at a regular meeting where President Xi was reviewing the work report from top government officials. And in a very short readout that we got from state media Xinhua, President Xi was urging these officials to remain calm and composed amid these challenges in external and domestic conditions. And if we read into the tone of that, it could signal that China is going to continue having a very measured response to all the actions that Trump has taken so far. And this is quite reminiscent of China's response in the early stages of the first trade war as well, where the government had urged strategic patience to dial down tension as they try to diffuse things through negotiations. But later on, as the pressure built up, China eventually took on a more assertive stance and adopted that wolf warrior style diplomacy. And this time, of course, China is more experienced, it's better prepared. But so far, based on China's retaliation of the 10% tariffs, we can still see that China is very calibrated in its response. It's all designed to avoid a big blowback, while at the same time signaling that China still has the power to harm U.S. companies more if necessary. And the other key message President Xi sent at that meeting is to call on officials to promote a sustained economic recovery, to improve the standard of living of people, to ensure social stability. And again, this signals the government's priority to focus on steering the economy back on track. And this comes as President Xi has been meeting with private sector leaders as well to try to, promote or I guess restore confidence to private sector businessmen, because the private sector has been a very key part of helping to foster these innovations, especially in the tech front.
Bloomberg's China correspondent Min Min Lo there. Let's take a look at some of the other stories that we're following. And the White House is ordering federal agencies to ready plans by March 13th for large-scale staff reductions, laying the groundwork for President Trump's most significant cuts so far. The plan also requires agencies to submit proposals to move offices out of Washington to cheaper locations. The so-called Department of Government Efficiency will help execute the plans. The White House has enacted a new system for media access, giving it control over who is able to cover President Trump in certain settings. The decision sparked objections from the editors of the three main news wires, Bloomberg News, Associated Press and Reuters. Bloomberg was the only one of the three selected on the first day of the new system. The White House hasn't said how the pool will be chosen in future. We do have some breaking news just crossing the Bloomberg, with the AI cloud firm Coreweave eyeing a filing for a US IPO within a week. Coreweave is considering filing publicly for an offering to raise about $4 billion within that week period. They're expected to target a valuation more than $35 billion in that listing. This is something that's attracted backing and interest from tech giants, including Cisco. Investors also include Nvidia, Magnetar Capital, amongst others as well. So the cloud computing computing provider Coreweave looking at filing publicly for an IPO in the US within a week, according to people familiar with the matter. So this is really one of the hottest startups when it comes to the AI space, and looking like that valuation will be greater than $35 billion there. They've tapped Morgan Stanley and Goldman Sachs as well as JP Morgan to lead that IPO. It's been a path to the public market that's been very closely followed, as investors have been really hungry for these sizable listings in that space. Let's take a look at one of the stocks that we're watching. We're just 15 minutes into the start of the staggered session here in Australia. Qantas is one as the airline pays its first dividend since 2019. Profit continuing to climb there and really underscoring both the financial recovery following the crisis, but also the robust demand for air travel as well. Qantas handing back $252 million to shareholders with a normal dividend of 16.50 Aussie cents a share and a one-off payment of 9.90 cents a share there as well. So that was the most generous standard dividend since 2008 for Qantas. Coming up next on the Asia Trade, BNY joining us to talk through their business strategy as they mark 55 years in Japan. Later we'll be unpacking Nvidia's latest earnings report a little bit further with Lopez Research. Plus we'll be talking strategy when it comes to AXA IM Equities, why they think automation could be the next big investment theme. This is Bloomberg. Our next guest oversees the international business for BNY, where those markets account for 40% of the overall business. The company sees strong growth opportunities in the APAC region, and this year marks the bank's 55th anniversary in Japan. Joining us now from Tokyo is Hani Kablawi, who's a Senior Executive VP and Head of International at BNY. Hani, really great to have you with us, and of course you are there in Tokyo to mark this milestone, and it's a pretty fascinating time to be in the Japanese market, right, with the trajectory really changing for the Bank of Japan. What are the biggest opportunities that you can see?
Yeah, what a great time to be here. You're right, Haidi. We were supposed to celebrate the big 5-0 5 years ago, but of course COVID lockdowns got in the way. Next best thing, 55 years, but in hindsight, looking at where Japan has gotten to over the past few years and the business opportunities that we see today, I don't think there could have been a better time to come here. I've got 6 of our executive committee members here with me. We are celebrating 55 years with our clients here. We've been here for a long time, and our business has continued to mature nicely. I think, look, BNY provides a platform that enable our clients to scale their businesses, and that's on the buy side, so investment managers and asset owners. It's on the sell side, so it's banks and broker dealers, and it's for issuers of debt and equity. And it's all about enabling clients to cross markets, right? So it's all about capital flows across borders. That's the business model. And by the way, we use a lot of technology, and we can get to talk about a little bit about that. But the opportunities across all 3 of those segments. Japan is our second largest globally, actually, right after the US, our second largest sell side user of our collateral management platforms.
When it comes to those business opportunities in Japan, where do you see them, and will you be expanding headcount?
Yes, so certainly on the sell side, with the banks and broker dealers, the use of the platform continues to increase. There's a lot of buy-side clients, courtesy of uncleared margin rules coming onto the platform. They're now connecting directly on our platform with the traditional sell-side users of the platform. That's certainly a continued growth opportunity for us here. Asset owners and asset managers, obviously, with introduction of NISA and the continued growth in, the government's focus on moving deposits into investments. We see a lot of opportunities there, both for our investment management businesses as well as for the back and middle office and front office processing businesses. It's the trading, clearing, settlement, custody, accounting, reporting, risk analytics of holdings, investment holdings, global investment holdings. So that's certainly a growth opportunity, and we have a lot of really interesting conversations taking place here in Japan.
It's a pretty challenging global macroeconomic and trade environment at the moment, right? We're in fact at the moment hearing from the US Commerce Secretary Howard Lutnick speaking in an interview talking about how China hates us. They won't let Chinese cars come into that market. So it feels like every hour, every day, there's fresh developments on that front. How do you assess the tariff and the geopolitical risk at the moment for your business?
Yeah, look, the news cycle certainly sped up over the past few weeks. We always say that we're in the business of preparedness, not in the business of prediction. But we do sit on a lot of data, $52 trillion worth of assets under custody and administration, and another $50 trillion in assets under data management. There's some overlap between those two numbers, but not a lot, actually. And so we have our big data models that tell us where investors are moving on a real-time basis. Think of it as a crystal ball of the present, not of the future. But on a daily basis, we see where our clients are moving assets. And I'd say, look, broadly, U.S. exceptionalism, which we've seen through 2024, we expect will continue. Obviously, a little bit of a reversal of that, some profit-taking, holdings, cross-border holdings of U.S. Treasuries down over the past 5-6 weeks. Certainly this quarter versus the prior 3 or 4 quarters, we've seen some selling by global holders of U.S. Treasuries. And certainly with the rotations taking place over the past few weeks since Davos, certainly Japan equities, China equities, and other APAC markets benefiting from some of that. But the underlying base case scenario is continued U.S. exceptionalism. I won't comment on tariff risks, maybe just to say that Japan probably well placed. I mean, it's, tariff risk for Asia generally is high. Japan is probably better positioned than most others from a tariff risk perspective per our analysts.
I wanted to get your views on US exceptionalism in the AI space, Brett. Obviously, you've had this multi-year agreement with OpenAI. We're still passing through the Nvidia numbers as well. Are you more compelled by the Asian, the Chinese AI growth story, or do you think there's further to go when it comes to these US opportunities?
Yeah, look, we're at the foothills of the use of AI and AGI in our businesses and platforms. We're pretty excited about the opportunity. We run a business that can benefit us, our own operations, from an efficiency perspective as we continue to automate workflows and use AI agents to really manage a lot of those workflows and help our own employees to do that. But we also see upside in extending capabilities, products, and services through the use of AGI. Some of the announcements you mentioned, I mean, we announced yesterday this multi-year agreement with OpenAI. We'll be using some of their capabilities around deep research as well as operators. So effectively, we're extending the use of AI to make sure that we're able to enable our analysts and our managers, business managers, to conduct processes that would have taken a lot longer to conduct in very short periods of time. Think of institutional credit underwriting and so on. Look, we run an open platform, Heidi, which means that we will continue to. Yep.
Hani, we're just going to have to leave it there. Really great to chat with you. Appreciate your time, Hani. Kablawi, the head of international at BNY. More ahead on the Edge of Trade. This is Bloomberg. Take a look at how we're trading. Of course, the day after Nvidia Day is really what we're watching, as we saw sort of fluctuating to muted session on Wall Street overnight. We're seeing some modest gains there when it comes to Sydney stocks after the losses of really the past sort of week or so. Singapore Nikkei futures, I should say, trading a little bit softer. We're looking like a softer open when it comes to the start of the session in Hong Kong there as well. S&P futures are up just modestly after that previous session ended largely flat, and a little bit of a gain when it comes to tech stocks overnight. Well, Nvidia has given an upbeat view of its highly anticipated Blackwell chip lineup, helping reassure investors after delivering some good but not great quarterly numbers. Although the company's fiscal fourth quarter sales topped analyst estimates, they did so by the smallest margin since February 2023. Let's bring Maribel Lopez, who's a founder and principal analyst at Lopez Research. Maribel, great to have you with us. Look, give us your sort of initial reaction to these numbers and the measured reaction and the way that we're sort of, the prism through which that we're looking at this. Do you think it's founded, or is it a case where expectations and, the delivery of these big numbers to date has just been so impressive?
Basically, they keep pulling a rabbit out of the hat as far as AI revenue growth is concerned. So on the top line, they did very well. I think there was some disappointments on the margin. Really, I think we were worried that they might not actually meet expectations due to some of the previous slips that they had in the Blackwell chip. Overall, it was a much stronger showing than I think many people had expected.
Was there anything concerning in these numbers to you, and do you think, I guess, it's sufficient to be able to calm some of the frayed nerves over the amount of investment that's gone into AI, the business use model, and the developments that we've seen, for cheaper investment in China?
I think there's no end of frayed nerves when it comes to AI, because right now there's two forces happening in AI. One, how fast hyperscalers or CSPs are going to be building these data centers. And then two, how fast are enterprises going to be consuming those data centers. So right now what we're seeing is Nvidia has been able to manage its top line by still selling deeply into CSPs at 50+% of their revenue. But the bottom line to get there has actually been a bit concerning. And in the financial call, that was really a lot of the questions were around how confident are we in the gross margin moving forward? What leads you to believe we're going to keep both the top line and the GM coming back in line as we produce Blackwell? So really, all eyes are still on Blackwell for the coming 2 quarters to try to figure out how sustainable the business is for Nvidia. They made a very good case, though, as to how the market just keeps expanding at an unprecedented and almost unnatural rate.
When it comes to Blackwell, so clearly the supply chain issues are over for the moment, and we saw sort of a greater contribution when it comes to revenue than had perhaps previously been expected. Do you think that was, a strong win on that side, and can we expect that continuation?
I do think it was a strong win to actually get Blackwell orders into customers' hands as fast as they did. I think they were very clear that they were going to be prioritizing the demand pull-through with Blackwell over the gross margin over the coming quarters. And that's not a bad strategy for them, because right now you want to tap into any of that great enterprise momentum that the CSPs are trying to capture. So I think for Nvidia, the real question right now is, what will the hyperscalers do in the back half of the year? Do they have the same confidence that they will build and that enterprise demand will come? Now, in the long run, or even in the midterm, I think Nvidia is spot on with all of the different AI use cases that are going to be coming online, all the opportunity to really move out of what has been more consumer AI and into more enterprise AI. But the timing of that is still quite unknown at this point.
He also, of course, spoke to the DeepSeek concern, right? But the argument is that the sort of perfection of these AI models is actually just going to drive greater demand. Is that a thesis that you buy into, or do you think that there's true sort of disruption for Nvidia here coming from whatever the next steps are in China?
So there's 2 parts to that question. So one is around disruption. And in the disruption front, I do think that we're seeing organizations build smaller models all the time. I think we're moving into the smaller model. I think how Nvidia tried to couch that is like, great, but there's many different ways to look at how we're going to be doing AI training, inferencing, post-inferencing, post-training. So he tried to lay a real long framework for that. But in the short run, there will be optimizations. But honestly, at this point, the demand for NVIDIA chips has been so high that I don't think you're going to see that, at least in the coming several quarters. The bigger concern, obviously, is China. They basically said that China was coming in at the same percentage it had, but it had been down 50% from tariffs. So whether or not that percentage maintains its consistency, they claimed it would maintain its consistency. That's a very big market to not really be a significant part of. So that is obviously a concern. And then global tariffs at large are obviously a concern, but nobody really knows where the tariff landscape is going. There's still quite a bit of negotiation. So that play out still has a couple of quarters in it.
Yeah, Nvidia itself saying, it's too early to tell, right? What are your expectations in terms of how impactful, not just tariffs, but of course the various restrictions that the US continues to place on China and perhaps some of the reciprocal actions that we can see from Beijing?
While I do agree that the exports and the restrictions could have a significant impact, the thing that concerns me more is whether or not there will be local regional competitive products to NVIDIA that, due to exports and due to tariffs, become much more favorable. So it's not just the fact that there's tariffs, it's the fact that there may be some considered local alternatives. Now, who knows what's going to happen moving forward, but I will say that NVIDIA has been strongly positioned in some of its lesser non-tariff markets. It had a very strong showing in the US, and we still are seeing quite a bit of demand in this market moving forward. So I think they have legs for the next couple of quarters in terms of really making the top line revenue number, how they manage the gross margins, how they manage the exports. The longer term international game is really up in the air for absolutely everybody in tech.
Maribel, really great to have you with us. Maribel Lopez, Principal Analyst at Lopez Research. Take a look at Qantas at the moment. This is where shares are trading at as the airline pays its first dividend in almost 6 years. Profit climbing. Demand for air travel, of course, has been on the up and up. We're seeing upside of about 5.5% at this point. Bloomberg's Angus Whitley joins us now for more. So, clearly investors are liking this. We've seen this sort of turnaround for Qantas, and the robust demand for travel has really helped.
It's quite an extraordinary set of circumstances, isn't it, when you think of the cost of living crisis which we're going through, and yet we've seen Qantas say travel is almost immune to this. In fact, they say they've never seen demand for business travel quite as strong. Jetstar, its low-cost airline, flew a record number of passengers in the fiscal first half for Qantas, and I suppose that's reflected in the dividend statements we had today. First dividend since 2019. Total of 400 million Australian dollars going back to shareholders. Within that payment, we saw the biggest base dividend since 2008. So really, this is an airline that has strength in all quarters. It's got strength in the budget low-cost segment with Jetstar, which of course plays into the cost of living crisis, but it's also carrying more and more premium passengers as well in the Qantas brand. So, listening to Vanessa Hudson, the chief executive, this morning on a call just after the results release, she was very optimistic. Says the outlook is very good for this company. They've got more aircraft coming in, more efficient aircraft, newer aircraft from Airbus, which of course reduces the fuel spend, goes right down to the bottom line. So that's why the stock is up. Just 4.6% before I came on. It's already up 72% before today in the past 12 months. So, it's an extraordinary set of returns for shareholders.
There's also more competition coming in, though, right? So much of this kind of Qantas story is its dominant position, both domestically but also the outbound routes as well. I do wonder the approval for Virgin's 25% interest in Virgin. Does that make a difference?
It should make a difference, shouldn't it? I mean, Virgin Australia has always been the second airline in Australia. Very hard to eat into Qantas's dominance. And what we saw today was the Australian government approving that 25% investment into Virgin Australia by Qatar Airways. And what that does is it gives Virgin, I guess, another sort of network of overseas routes to fly. It'll be flying to Doha this year, and then once passengers get to Doha, it opens up a whole network of legs that Qatar Airways can take them on. So I suppose if you're an Australian passenger, you're looking at overseas flights, Virgin Australia suddenly comes into a mix if you're heading into Europe, because you can make the stop in the Gulf instead of going through Singapore with Qantas or even direct to London with Qantas. So yes, in the long run, it is more overseas competition for Qantas for sure.
Yeah, shareholders loved Alan Joyce, right? Customers less so, but at the end of his tenure. Do you think Vanessa Hudson has successfully sort of reputationally turned the ship around?
Yeah, it's a good question. I mean, she certainly had her work cut out when she joined, didn't she? It was under Joyce, it was indisputably more investors and shareholders than passengers, and that was really borne out in data. And Hudson's task was really to swing that pendulum back to passengers, and on the face of it, she is doing that. Passengers are a record level on Jetstar, demand is up, and returns are up for shareholders. So at the moment, she's pleasing both camps on the face of it. Having said that, cancellations are higher than she would like, but that's partly a function of weather as much as anything else.
Bloomberg's Angus Whitley with those Qantas numbers, one of the stocks that we're watching today. And some of the other earnings reports that we're following, Petrobras has announced a $1.6 billion worth of dividends, short of the average analyst estimates of $2.8 billion. The Brazilian oil producer reported a surprise net loss for the fourth quarter of $2.9 billion, blaming what it calls exclusive events, including currency losses. The company joins other energy majors, including ExxonMobil and Chevron, and rewarding shareholders despite strained cash flow. Salesforce has given a fiscal year revenue forecast that fell short of estimates, dimming optimism that a new artificial intelligence product would spur faster sales growth. It sees revenue of around $41 billion in the year ending January 2026. Salesforce launched its AI customer service product Agentforce in October. More ahead on the Asia trade. This is Bloomberg. Yomiuri is reporting that Seven & I is set to abandon plans for a management buyout after potential leading investor Uchida decided not to participate. A breaking news editor Gareth Allen joins us now for the latest. So Gareth, what's this latest twist and turn in this saga?
That's right. The ongoing saga of what's going to happen to Seven & I indeed. Yesterday, the news broke that Japanese trading house Itochu Corporation, which was set to invest something in the lines of $1 trillion yen in the potential founding family management buyout of Seven & I Holdings, that they're not going to participate anymore. They've decided that there wasn't enough synergy in the deal with their own food business, so they've got out of it. Also, the Thai conglomerate that runs 7-Eleven stores in Thailand has also said that they're not going to participate. So the reports this morning in Yomiuri and a couple of other morning papers said that Seven & I has concluded that they're not going to be able to secure the funding they need for the management buyout, and their board is likely to make a decision in the very near future that they're going to abandon the plans for the founding family to buy the company out.
So what happens now? Does that mean they have to re-engage with Alimentation Couche-Tard?
Yeah, well, I mean, I guess they're now left with two options. Either the highly unpalatable deal with Couche-Tard that the company has made quite clear that they're really not very interested in pursuing. Either that or they're going to have to go it alone. And at the moment, they've been trying to restructure. They've been talking about spinning off various businesses, and they've been actually selling off various parts of the company. But they still don't seem to have a particularly clear strategy for where they go alone. So that's the two options now, with the management buyout possibly off the table.
Our breaking news editor Gareth Allen with the latest on what's going on with Seven & I. Well, Amazon has rebooted Alexa with artificial intelligence, marking the biggest overhaul of the voice-activated assistant since its introduction over a decade ago. The company's devices chief, Panos Panay, told Bloomberg about the new AI-integrated services that the product provides.
She's smarter, she's conversational, she's personalized to you. It's so exciting when you have a conversation with Alexa. It feels incredibly natural, but I think most exciting is she'll actually help you get some stuff done.
I really want to understand the underlying technology here, because in many ways, Amazon has continued to be agnostic to large language models. You want to offer them all. You have, of course, this relationship with Anthropic. How much has this technology been infused to making her more conversational, making her more useful?
You know, you said it. We use different foundational models for sure, and Alexa picks the right model for the job. We use Amazon Nova, which is exciting, and just an incredible LLM. And then we use Anthropic's Cloud as well, which has been phenomenal for the product. And basically, depending on what the customer is doing, Alexa chooses the right path and delivers the results needed.
What's interesting, though, is perhaps timelines were pushed out. We first heard about a new AI-infused Alexa back in 2023. You said on stage that really you've been limited by the technology. What are the key limitations and how have you fixed it? I
mean, you have to re-architect it from the bottom up. The first thing you have to know is, like, when you have hundreds of millions of customers already using the product, you have to deliver back to them everything they already love about it. And so you have to start there, which is one of the challenges with LLMs. It starts to change that experience. And it wasn't just re-architecting it to change the brain with an LLM, it's then also infusing all the APIs that connect to the product so you can call the partners that are needed to do the task at hand. And so when you try and bring those two things together, it's not been done before at this scale. We need to take our time, get it right for our customers, because the customers who already love Alexa have to love it more moving forward. So it's all about customer focus to make that true.
And it's important when you're thinking about security of your house, not just making reservations for restaurants, but potentially eventually making financial decisions for you as well. Will we see a stress test of this? Are you expecting that there might be the odd hallucination, as like humans always do, push these things to the very edge?
I mean, this is why we took our time. We wanted to make sure we got it right. To your point, if you're going to lock the door, we're going to lock the door. And we got to make sure that's the case. And because AI, has been grounded in Alexa for 10 years, we know how to do it very well.
Amazon's SVP of Devices and Services, Panos Panay, there speaking with Bloomberg's Caroline Hyde. The latest when it comes to some of these corporate headlines we're following, and Bloomberg has learnt that the founders of Ben & Jerry's have expressed interest in buying back their ice cream brand from Unilever. While some initial discussions have been held, the founders would need solid financial backers to make it happen. Unilever has stated that Ben & Jerry's is not for sale and is instead planning to spin off its ice cream business through a demerger. Shares of AppLovin fell sharply in New York after 2024's best-performing tech stock was targeted by short sellers. It saw a record intraday rout of as much as 23% before paring some of those losses at the close. Two short sellers allege that AppLovin misrepresents the benefits of its AI advertising platform and instead force-feeds app installations on phones to drive up revenue. AppLovin's CEO has denied the allegations. More ahead on the Asia trade, this is Bloomberg. This week we're taking a look into Taiwan's emerging drone industry. Bloomberg travelled to Chiayi County in the south of the island to visit a major R&D centre and spoke exclusively with the region's head, Weng Chang-liang, on the interest they're seeing.
Recently, members of the UK Parliament visited to learn about Taiwan's drone development and explore potential collaborations. Vietnam has also shown particular interest in whether our drone technology could contribute to their agricultural sector. And members of the U.S. Congress have visited the R&D Center in Chiayi to understand our products and to identify possible opportunities for future cooperation.
That need for a so-called democratic supply chain, and that's really the push that Taiwan is making. We know that the US is already seeking that. Do you see the same level of demand from the UK and also Europe?
I think this will certainly have a significant impact, especially in asymmetric warfare. Drones are small, relatively inexpensive, And they are becoming increasingly useful in terms of telecommunication, target acquisition, and enemy reconnaissance. I believe that drones will play an increasingly important role in future asymmetric warfare.
How do you support companies that have business in China as well, though? Because that's a challenge. If you're a drone company that is still manufacturing or exporting products to China, and you're also trying to be part of this democratic supply chain as well.
The entire drone industry, particularly in the non-red supply chain, is currently under strict regulation in Taiwan. So manufacturing should still be primarily concentrated within Taiwan. Taiwan now can produce 90% of the components in a drone. This means that we will still have issues in the supply chain, and securing components from so-called democratic supply chain comes at a much higher cost, as production is not done on a large scale, but rather through customization. This is the core difficulty we face. Our most critical breakthrough will be figuring out how to open the market and establish organic connections with the global democratic supply chain. This is our main focus moving forward. For example, in the past, an engine manufactured in China might have cost only 10,000 Taiwan dollars. However, if we were to produce the same customized engine in Taiwan, the cost would rise to around 60,000 Taiwan dollars. This stark cost difference is a challenge we must address. The key to reducing manufacturing costs lies in expanding both the supply chain and the market.
Do you think it's ever possible for Taiwan to be able to produce a drone for the same price that you can source from China?
China's drones hold a 70% share of the global market. Taiwan's strengths lie in its abundance of ICT talent. And Taiwan produces the chips that the world desires. Taiwan also has a wealth of expertise on materials science. Therefore, I believe our approach should differ from China's mass-market, low-cost drone production. Instead, we should focus on developing high-end and specialized drones, rather than models for general consumers.
Bloomberg's Annabelle Drewler there speaking exclusively with Weng Chang-liang, who's a magistrate of Chiayi County in Taiwan. Taking a look at some of the stocks that we're watching where trade begins in Korea and Japan shortly. And of course, a lot of these are sort of Nvidia-related tech stocks will be in focus. But Nissan is another one to watch that was cut to junk by Fitch Ratings just days after we saw the downgrade from Moody's as well. Seven and I have been talking a little bit about the options now remaining when it comes to the convenience store operator looking to abandon that MVO after Itochu has pulled out, according to Yomiuri. What does that mean in terms of re-engagement with Couche-Tard? Also watching Japan Post with those plans to sell a $4 billion stake in their banking unit. This is Bloomberg. This is the Asia Trade. We are counting down to Asia's major market opens. And Paul, there's a couple of narratives, neither of which are sort of, new ones, right? One is, of course, passing through the Nvidia numbers, where they're enough to give a bit of a boost in the AI space, which has been kind of undergoing a bit of an existential crisis of late. And then, of course, the other is President Trump.
Yeah, uncertainty again over tariffs, the date at which they kick in for Canada and Mexico, some contradiction between the president and White House officials. But I'm sure we'll find out eventually, won't we? But at least we got a little bit of certainty out of Nvidia, as you say, and it's going to be interesting to see the impact of that ripple across. Yeah,
the Blackwell narrative was really encouraging. They're also even optimistic in terms of what the developments from China AI mean in terms of the perfecting of these AI systems, right? But take a look at the open, because we are expecting to see a bit of caution today. The Nikkei 225 opening out of the gates. We are seeing a little bit of upside there when it comes to trading in Korea Korea there as well. The yen trading at 148.88. It was a bit of a stumbling sort of session when it comes to the US dollar. We saw some modest losses and then a little bit of a gain in reaction to this confusion over the Canada-Mexico tariffs. Do they take effect in April or in March? That's the contradiction there. We did see that move when it comes to the Mexican peso as well as the Canadian loonie there as well. The White House later confirming that March 4th is still that deadline. No possible extension has been decided upon yet, but of course we know that really anything is possible when it comes to President Trump there. Taking a look at what we're watching when it comes to Korean stocks as we just sort of a minute or so into the open, we'll be watching of course some of those key AI chip related names as well. The cost be a little bit softer there, but some gains that we see in the Kosdaq index sort of mirroring the modest gains that we saw across the Nasdaq 100 overnight as well, Paul.
Let's take a look at how we are tracking here in Australia after the first hour or so of trading. Pretty good. The ASX better by about 0.5%. One of the better performing stocks on the index, Qantas, now better by more than 6.5%. The underlying profit met estimates, but the big news there, first dividend for Qantas shareholders, first time since the pandemic, 9.9 cents per share. The Aussie dollar, a little changed at the moment, but some interesting movements in the bond space right now. The yield on the 10-year, well, and the 2-year, just ticking up ever so slightly, but the broader trend line there has been weaker, and we've got Morgan Stanley forecasting the 10-year could possibly hit 4% if the market prices and rates of 3.25% and Friday's inflation numbers in the US show a decline in price growth. So the market starting to bet that the Fed focus may soon shift from inflation back to growth, Heidi.
Nvidia, of course, Paul, giving that upbeat view of its highly anticipated Blackwell lineup, helping reassure investors after delivering some good but not great quarterly numbers. Our Bloomberg Intelligence senior analyst Kunjan Subani joins us now. So the Blackwell narrative was certainly comforting. As our previous guest said, this is a company that keeps pulling rabbits out of the hat, and I wonder if that sort of good but not great prism is because we're so used to seeing out delivery from Nvidia.
No, exactly. I mean, look, fundamentally, it was, again, a great beat and raise. However, when you compare it sort of versus inbuilt expectations, this earnings was sort of a middle of the road. So the 11 billion Blackwell number, the Hopper sequential growth, and the other commentary, I think, did help ease some of that air pocket concerns and Blackwell supply concerns. But there was nothing big in terms of material upside or a catalyst that would move the sentiment really from these results.
And Kunjan, still some unknowns here as well, particularly the impact of potential tariffs or chip curbs, because DeepSeek's shown us what China can innovate, doing a lot with a little.
Exactly. I mean, and you see that sort of for the first time in a conservative outlook, I must say. Usually their raises are in the magnitude of 2 billion. This time around, the outlook they gave, even though they beat, we think it was a bit conservative. And there must be some, buffering in there for probable chip restrictions coming in the future.
Kunjan, in your view, they're also fairly sanguine when it comes to the China AI progress, right? Saying the sort of perfection of these models is only going to result in more demand. Do you think this is in part just sort of hopeful bravado, or do you think that the impact of DeepSeek and the progress that we're seeing there on a cost basis is going to be less impactful than what we're seeing right now?
I mean, it's a very difficult thing to forecast at this moment. Near term, irrespective of that performance, we don't think the plans for the US cloud providers and hyperscalers CapEx spending is going to change, which bodes well for someone like Nvidia, at least for 2025 and most of 2026. The question remains on the long-term impact, right? So there's two schools of thought. One, which you suggested, that this might actually increase the demand for chips and hardware and accelerate the rate at which inference scales. But if you are in the other court and if you think, this might reduce the hardware spending, we don't, at this point, it's very hard to call that out, and we don't think that is what might happen. The worst case scenario might be that the need for different kind of chips might appear, so there might be share shift from, let's say, GPUs to ASICs. Again, too early to speculate on that area.
Kunjun, production and the Blackwell chip in particular gets a lot of the headlines when it comes to Nvidia, but are we overlooking some of the unsung heroes here, particularly Nvidia's data center performance?
No, I mean, Blackwell, it is in the new product ramp cycle, so definitely key focus on that does merit the key focus on this. They also pointed out Hopper's growth sequential, which was, I think, a really surprising positive, as there were concerns of Hopper demand dying down, and which should also create a base for the data center segment, that if there is any more delay in the Blackwell ramp, at least in the meanwhile, the Hopper can sort of pick up the slack.
All right, Bloomberg Intelligence Senior Industry Analyst Kunjun Sabani there. And of course, a rising tide floats all boats. We have been very interested to see how Nvidia's results impact some of the Asian chip names. And at the moment, we see some positivity in the get-go. SK Hynix in particular better by about 1% there, second from the top on your screen. Okay, let's get over to Tom Riley now, Head of Global Thematic Strategies at AXA IM Equities. And Tom, you've owned Nvidia stock for a very long time. When it comes to realities versus expectations, those two things seem to be getting a little bit more closely aligned. But if we take a look at the price target that analysts had for Nvidia, it's now $173. Do you think that's realistic, and when might we get there?
I think that's a very difficult question to answer, but I think when you look at how Nvidia's traded over the last 9 months, it's relatively unchanged since last summer. And we've had some question marks over what CapEx looks like, whether the CapEx from the hyperscalers is sustainable. And then earlier this year, some of the question marks that arose from DeepSeek. But I think the key things to consider here are, from a valuation perspective at least, Nvidia is below its historic average over the last 10 years. It's trading at a relatively meaningful discount to that average at about 30 times PE. And that does reflect some of the uncertainty that's come up over the last few months. I think what we saw with the results, and they've been discussed at length already, is maybe some of the worst case scenarios have now been taken off the table. So some of the question marks for, what is the impact post DeepSeek? Do things change meaningfully? We've had a number of companies talk subsequent to them. Everyone was waiting for the results from Nvidia, and Nvidia did a good case of really explaining why, as AI advances, there are further needs for more compute, and it will be more intensive going forward.
Yes, I too have discovered for the first time a thing called Jeevan's paradox, but let's move on from there. Considering the innovations, though, that DeepSeek's managed to achieve, do you anticipate that we could see more curbs in terms of exports from some of Nvidia's products to China?
It does seem that over the last few years that the export restrictions have become more and more stringent, and I think most investors expect that to continue. What you have seen, though, over the last few quarters is the percentage of Nvidia sales going into China decreasing. So it does mean if that restrictions further pick up, there is probably a lesser impact to the revenue base. At the moment, I think investors' primary focus is on the ramp of Blackwell, how that's looking into next year, and then future iterations. Clearly, any negativity around volumes that can be sold into China or into other areas do impact revenues, do impact the profitability of the business. But I think the crux of the investment case for Nvidia continues to be how it ramps into the data center and also how it broadens outside of data center into lots of other areas that AI are starting to impact.
When it comes to the risk of broader US and global reflation or even stagflation, does that environment have an impact, negative or positive, when it comes to broader robotics or automation as a thematic for investors?
I think when we think about demand trends underpinning robotics and automation, what we've seen for the last 2.5 years is really quite a weak industrial capex environment. So post the excesses that have been built up during the COVID period, we've actually been in a relatively modest but noticeable industrial recession. If you look at the US ISM manufacturing PMI, it's been negative or under 50, signaling contraction for most of the last 2.5 years. What you are starting to see is a little bit of positivity here. This data chain is a little bit choppy. So the fact that it's recently broken out above 50, which signals expansion, let's not extrapolate that just yet. But we are getting to an environment that does seem better for industrials. If you look at some of the leading indicators in Japan, things like Japanese machine tool orders, those have been improving for the last 12 months or so and have turned positive probably over the last 3 to 6 months. So there is a better backdrop that's starting to build for the industrial economy. Of course, the prospects for tariffs can weigh on that, but it is helpful that we're seeing a better environment. Companies are starting to call this out. For the first time in a long time, companies have started to indicate that their automation businesses are seeing signs of life. We've heard that from Siemens in Europe over the last week or so. A little bit before that, we heard that from Rockwell Automation in the US. So I think it is an interesting environment for some of these more cyclical parts of the market that have been depressed coming back now.
It's been an interesting environment over the past little while for ex-US opportunities too, right? As you point out rightfully, a lot of your exposure is sort of US dominance, and perhaps that US exceptionalism is something that you'll continue to argue for. But I wonder, is there interest in this diversification trade that you see for China, for Europe, for other parts of Asia?
I think so. I think the US has continued to economically outgrow, almost all parts of the world over the last few years, and signs of that slowing, I think, are hard to come by at the moment. But there are also signs of pickups elsewhere. Typically in the strategies that we run, we're relatively agnostic to where companies are headquartered. Typically, we're investing in global leaders who will serve demand wherever it comes in the world. So if that's a Japanese automation company, if it's Fanuc or Qantas, whether demand comes from the US and some of the activities around reshoring initiatives, or whether that demand picks up in China, it doesn't really matter. They will serve that demand wherever it is in the world. What's important for us is we are seeing demand start to come back in certain areas. The question is whether that's sustainable, whether tariffs have an impact on that. But some of the signals that we're seeing at the moment are quite encouraging.
Another question we see getting asked in the broader space is when is the amount of spending on AI going to be justified by potential returns? How do you see that question being answered?
It's a difficult one because at the moment you're just seeing capex rise and rise and rise. I think when we started the year, the expectations for 2025 capex from the 4 US hyperscalers was about 280 billion. As we sit here today, I think expectations have risen to about 320 billion. So you are seeing it come up. What we do need to see is a return on that investment, and clearly the companies that are investing in that can see those returns, but there is some skepticism amongst shareholders as to when we see that. Some of the questions that have arisen post DeepSeek, and is AI easier or cheaper to train going forward, that brings down the cost curve, and that can help with the ROI. There is a smaller or lower threshold to get over to get that return target. But investors are paying a lot of attention to any data points they can get from companies as they report their results. Salesforce.com just reported, and that was quite interesting, their product agent force. They talked around the number of conversations that that's having at the moment. Some of the data they gave was that 84% of the conversations that were handed to AI agents were resolved successfully with the agent. 2% involved human intervention. So we are starting to see companies launch products, start to monetize that. Still very, very early stages, but we are seeing signs of success. So we need to watch that over the coming quarters and coming years, because that will be crucial for investors. Are we making a return on these AI investments or not?
All right, Tom Riley, Head of Global Thematic Strategies at AXA IM Equities. Let's take a look at how Nissan stock is tracking. It's a little bit lower because, well, then there were three. All three major credit ratings agencies have now graded Nissan's credit as junk. Fitch has joined Moody's and S&P in cutting the car maker's ratings, so the car maker being cut from BB+ down to BBB-. Fitch citing weak earnings and uncertain prospects for recovery. Still to come, the White House confirms the deadline for tariffs on Canada and Mexico remains March the 4th, after President Trump makes contradictory remarks. Details of that next. This is Bloomberg.
Well, 7&I is one that we're watching when it comes to trading in Tokyo. At the moment, we're just less than 20 minutes into the start of trading. We've seen that stock come online and falling 12% after it says that the founding family couldn't secure funding for a proposed management buyout. As a result, there is no actionable proposal to consider at this time. They are still exploring all opportunities to unlock shareholder value, including a speculated re-engagement when it comes to the proposal they had previously received from Alimentation Couche-Tard. The committee says they're engaging constructively with Couche-Tard to determine if a proposal that's actionable can be achieved. And of course, the previous proposal was really being seen as quite unpalatable for 7&I, but fewer choices now on the table. And let's get back to one of our top stories. And President Trump has given a series of apparently contradictory answers about his tariff plans. During a cabinet meeting, he was asked if he planned to move forward on levies against Canada and Mexico next month.
Mr. President, can you clarify the Canada-Mexico tariffs? You had put that 30-day pause, but you just referred to April.
25%.
25%. When does it go into effect?
April 2nd.
April 2nd for Canada-Mexico.
Correct. And for everything.
Well, the White House later clarified the deadline for those tariffs remains March 4th. Let's bring in our White House correspondent, Kayla Gardner. So, Kayla, clear as mud at this point.
Yeah, we saw a series of contradictory statements there from President Trump's first cabinet meeting today, where he had his full cabinet, including Elon Musk and the Commerce Secretary, Howard Lutnick, who oversees pretty much the implementation of tariffs. He is the lead agency overseeing that effort. And we saw Trump really signaling today that he does not want to stop these tariffs that are right now on pause and set to potentially go into effect on March 4th on Canada and Mexico. And that is really despite the fact that both Canada and Mexico made these big concessions, sending 10,000 personnel to the southern and northern borders each, trying to avoid these tariffs. And that had triggered a 30-day pause because those were set to go into effect earlier this month. And really, this signals potentially to other countries that possibly, even if they are to make concessions, Trump could still push forward on these tariffs. We know that he is intent on doing these reciprocal tariffs that could impact pretty much every single country that had some sort of tariff or non-tariff barrier on U.S. goods. And that, again, is expected to go into effect on April 2nd. And he also threw out there today EU tariffs set to go on the European Union. And he said that those could impact cars and potentially other products. But really, the scope and range of that is still also unclear.
Kayla, normally that'd be enough, but the president had more to say also about Taiwan. President Trump, declining to commit to defending Taiwan. Now, this would represent a major policy departure from the US. Is this the case, or is there potentially clarification incoming on that as well?
Well, it is a departure from President Joe Biden's stance, who had repeatedly said when he was in office that the U.S. would intervene militarily if China were to make such a move to invade Taiwan. But it is not that different from the United States policy overall, which has been around for decades. And that is one, a strategic ambiguity. They said that they will provide Taiwan with resources to defend itself. But that agreement between the countries does not explicitly say that the U.S. will intervene. But this really goes back to Trump's practice of keeping everything on the table when it comes to negotiations. He said very explicitly in that meeting today, he does not want to tell the press. He said he's not going to negotiate publicly. And this is something that he says generally when he's asked specifically about national security issues, that he's not going to negotiate in public. And he seems to be doing the same here with Taiwan.
Kayla Gardner there with the latest when it comes to those geopolitical uncertainties that we'll continue to monitor. That's our White House correspondent. We do have some breaking news just crossing the Bloomberg now when it comes to Nissan, potentially some leadership changes there being mulled. Nissan drawing up plans to replace Uchida as the chief executive. And of course, this is a company that's undergoing a significant number of challenges at the moment, the latest of which we are seeing, of course, Nissan cut to junk by Fitch Ratings, following hot on the footsteps of Moody's downgrading downgrade as well, now being downgraded as junk by all three major credit raters, and a lot of concerns about persistently low profitability, the delayed recovery trajectory. We've seen really weak sales pull, an outdated model lineup, these attempts to come to a potential deal with Honda amongst some of the possibilities really coming to an end, and the sort of financial situation and outlook really struggling there.
Well, Bloomberg has learned that China plans to start recapitalizing three of its biggest banks in the coming months, injecting at least $55 billion of fresh funds. Let's bring in China correspondent Min Lo in Hong Kong. Min, something along these lines was flagged back in September. Tell us a little bit about the magnitude of this and what it's going to do to, reassure investors.
Yeah, so back in September, the banking regulator had announced that they were going to replenish the core Tier 1 capitals of the big state banks. And what we are hearing from sources now is that the regulators the authorities are going to inject as much as 400 billion yuan in its first batch of injection to three of those 6 banks, including BOCOM, the Agricultural Bank of China, and the Postal Savings Bank of China. And the question here is, because you look at the screen there, you can see that the capital levels of the big 6 banks are far above the minimum requirement of 8.5%. Most of them are ranging from 10 to 14%. So actually, these banks don't need the additional capital to continue their day-to-day operations. And what this means, according to some analysts, is that it is a signal that the banks are going to be called to take on more credit risks. And we know that this has happened time and again. These banks being asked to take on national service, to provide cheap loans to some of the risky borrowers like the real estate developers, the local government financing vehicles. And this time, they're injecting this capital in the aim of that is hopefully to get these banks to be more resilient against such risks and to spur lending, because some of these banks, given that they are state banks, do have to act as a shock absorber in the entire financial system.
And it is that time of year again, the CPC, CPPCC2 sessions. What could we expect, and any sort of potential implications for investors?
So our equity analysts, our in-house equity analysts have been crunching the numbers and looking at historical data over the past 20 years. Chinese equities actually have been pretty calm and muted before the NPC. They tend to decline a little bit during the week of NPC, but if you look at after the NPC, about a month after, Chinese equities could go up as high as 5 or even 9% or so, and the best performing sectors tend to be the real estate, the industrials, the materials sector. These are the ones that are most sensitive to these policy signals. And so when it comes to real estate, for example, we expect policymakers to take on the same tone that we heard at the Central Economic Work Conference. Pretty strong stance to support the sector there. Also looking out for R&D when it comes to supporting tech research, given that the R&D levels have not returned to pre-pandemic levels as well. There you can see that the red chips, the state-affiliated stocks in Hong Kong, have been falling behind the tech stocks. We could see that broaden out after the NPC.
Bloomberg's China correspondent Min Lo there. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how we're setting up when it comes to European futures, with stocks in the previous session hitting a record high, watching, of course, earnings, a potential peace deal in Ukraine as well. We're seeing a little bit of downside there from those highs, but strategists, particularly when it comes to Barclays, say that stock pessimism has faded.
Let's take a look at how Asia markets are tracking. It's somewhat of a mixed picture at the moment. We're seeing a bit of positivity here in Australia. A number of stocks doing very well, among them Qantas, after announcing its first dividend since the pandemic. The Nikkei looking kind of flat. The Kospi losing ground now, and some of those chip-related names also slipping. SK Hynix is now off 1.25% after a bright start following those Nvidia earnings, where we did get upbeat news on revenue from Blackwell. Fourth quarter sales did top estimates for Nvidia, but didn't blow things out of the water as we've come accustomed to. So yeah, Asia stocks are looking somewhat mixed right now. Well, Oaktree Capital Management is said to be laying claim to Evergrande assets outside the Hong Kong liquidation process. creditors have yet to receive a penny from the distressed developer, which was ordered into liquidation a year ago. For more, let's bring in Bloomberg China credit reporter Loretta Chen. So, Loretta, it's been a year since Evergrande's liquidation. Is it surprising that so little progress has been achieved?
Yeah, I think for the creditors, it's certainly very disappointing that they haven't really got their hands on a single penny. And that's not because the liquidators haven't really got hold of any asset, but because the primary asset that they got their hands on were used to primarily pay for the legal fees for all the court lawsuits that we are seeing here in Hong Kong. I think for the creditors, it's somehow expected that the process is going to take years, and we have some lawyers really telling us that this is a process that could take decades because Evergrande has over hundreds, if not thousands, of these entities for liquidators to go through one by one.
What is a lesson for distressed investors trying to snap up these cheap assets from what we've seen so far in the property crisis?
Yeah, I mean, what we can see from Oaktree by appointing their own liquidators, they can sort of go to these entities that are closer to Evergrande's assets. And of course, everyone's bottom line expectation is that as a foreign creditor, your claim towards all these Chinese property companies' onshore assets is very limited. And there is currently no sort of a tried legal system in Hong Kong and China that allows the foreign investors to really directly get a hold of these onshore assets. So I think they have to, in these years of process, continue to lower their expectations. We're really hearing from Deloitte that the recovery rate of Evergrande's defaulted bonds is around 3.5%. So a lot of these creditors actually snapped up these assets from the offshore bond market at a premium to that 3.5%. So I think, it's just a continuing process of lowering their expectations.
All right, Bloomberg's Loretta Chen there. Staying with the property theme, and Bloomberg Intelligence believes real estate investment trusts exposed to AI data centers could get a profit boost from more efficient AI models like China's DeepSeek. ASEAN real estate and conglomerates analyst Ken Fung joins us now with more. So Ken, can you explain to us the logic behind this?
Hi, thanks for having me. Yeah, sure. So what we think is that more efficient AI models like DeepSeek, it could actually result in more or broader AI adoption as well as innovation, which could create more use cases and application. This could actually underpin long-term demand for data centers. And also, this could boost the profit for data center exposed REITs, which includes Digital Core, Capital DC, and also those that have the exposure, which includes Mapletree Industrial and also CapitaLand Ascendas.
How does a data center business compare with other property assets like malls and offices? Is there an edge?
Yeah, we would think that for data centers, they have an edge versus other property types. This is because that there's a substantial upfront cost and mission-critical nature of data center, which results in a high barrier to entry. To build a data center, you need to secure a suitable site, as well as the power and fiber connectivity that is needed, and regulatory approval. All this will take a long time and also costly to build. This could result in a long lease expiry for the REITs that we are seeing. For Mapletree Industrial's North America data center portfolio, it has a long-weighted average lease expiry of 6.2 years. And if we look closer to home, Capital DC has a lease expiry of 4.6 years.
So how about the retention rate of data center tenants? Because I imagine these would be fairly long-term tenants.
Yep, you are right, exactly. So what we are seeing here is that because the data center are crucial to a firm's operation, as well as the cost and business risks relates to relocation is high, this could cause tenants to be relatively sticky and resulting in a high retention rate for the data centers. In monetary terms, it costs around 15 to 20 million US dollars to migrate 1 megawatt of IT infrastructure. In terms of business risk, it could cause disruption or potential downtime when you are relocating. An example that we are seeing here is Mapletree Industrial's tenant in the US, AT&T. They have actually extended their lease twice, once by 12 months and the other by 17 months, due to issues with regards to its relocation. Hence, we do see that data center tenants are quite sticky and they do not take the decision to move lightly. This results in high tenant retention rate of above 90% that we have seen historically.
All right, that's Bloomberg Intelligence ASEAN real estate and conglomerates analyst Ken Fung there. Well, confidence in China's economy remains elusive going into next week's National People's Congress, but Bloomberg Opinion columnist Shuli Ren thinks the DeepSeek AI disruption and a hit movie are providing a rare dose of optimism for the nation. So Shuli joins us now from Hong Kong. DeepSeek and Ne Zha 2, which I must be honest I hadn't heard of until this morning, are giving the Chinese a much needed boost of confidence. Do you sense the mood in China changing?
Absolutely, Paul. In the last few years, one sentiment that has emerged in China is that people feel that the path to success is narrowing. Unless you go to the right schools, have the right majors, or born into the right families, you just cannot succeed. DeepSeek and Ne Zha 2 proved otherwise. DeepSeek's founder came from Zhejiang University. It's a very good school, but it's definitely not Tsinghua or Beida. And then Ne Zha 2's director, Jiaozi, literally meaning dumpling in Chinese, he actually was a professional children. Basically, after college, he stayed at home for 3.5 years, and the whole family had a really tough time. During that time, his father passed away. His mother, basically, the mother and son lived off 1,000 yuan of a monthly income, and now Jiaozi dumpling is a millionaire many times over. And the people just feel that that the whole concept of professional children has become very popular. Like tens of millions of middle-class families, their children have no jobs to go to after university, right? And they just stay at home. And the parents are very anxious. They just feel like, oh, how will my only child often find their footing in the society? And the Jiaozi proved them otherwise. And that's a huge boost of confidence.
The laying flat generation, right? Shuli, I do wonder, there's been so much more optimism when it comes to the return of the private sector, China tech, even Jack Ma seems to be back in the fold, right? Do you find this convincing, and is this one of the reasons why we're starting to see a bit more optimism?
I think a lot of times it's all about sentiment and confidence, right? Like, what should China tech stocks valuation be? Should it be 20 times, 40 times? We don't really know. But I do feel that this time around it's a little bit different from last September when China had a big stimulus fuel rally. Like this time, you see, like yesterday, for instance, there was news about like US having more export controls on chips to China, but mainland Chinese, they basically took the opportunity to buy on dip, and then they basically boosted the stock price very well. I think that's because they feel that China is no longer a value trap. And it's actually, there's still growth. You know what I mean? Like if you look at DeepSeek, if you look at Ne Zha, there is still growth to be had. Whereas in 2023, 2024, people just basically talked about the Japanization of China. The narrative does change a little bit in the last month or so.
It's nice to have some good news for a change. Shuli Ren, thank you for giving it to us. Our Bloomberg Opinion columnist there. We do have more ahead here on the Asia Trade. This is Bloomberg. Well, Bloomberg has learned that Nissan is drawing up plans to replace its CEO, Makoto Uchida, following another dismal set of earnings and the collapse of talks to combine with Honda. Let's bring Katrina Nicholas, who leads our Asia transport coverage. Katrina, so the mounting woes when it comes to this automaker, right? Is a change in leadership going to make a difference at this point?
Well, I think that is the certainly question on all investors' minds, whether a change at the top can change the fortunes of Nissan. One thing is for certain, though, that even if Uchida does head for the exits, which is what we're hearing is going to happen potentially in the next couple of weeks, who will replace him? That's obviously question number one. But also, Nissan remains a company in dire need of a financial rescue. They have, they're bleeding cash. They have an outdated product lineup. These are still things that need to be fixed, and so anyone coming into that top job is going to still have those issues that are going to need to be resolved, and very quickly.
So what's next for Nissan? Where does this leave them?
Well, the talks are still perhaps ongoing with Hani. They're a company that's been waiting in the wings, perhaps looking to make a move on Nissan after the deal talks with Honda fell over earlier this month. There have also been reports that US private equity firm KKR might also be interested as well. First and foremost, though, Nissan does need to fix its own financial situation. Coming up next week, we expect to hear from them about the latest on their autonomous driving technology. Now, this is something that is emerging as the new battleground for a lot of car makers. And they did say when they released their pretty dismal third quarter earnings earlier this month, that they would be updating the market in terms of what they plan for a partnership going forward within the month. So we are expecting to hear something from them around mid-March.
Katrina, what's the worst case scenario here, and could we see sort of broader global trade complications make this situation even worse?
I think definitely if we see the tariffs that have been mooted by Trump placed on Japanese automakers, that would be a huge blow for all of them. I mean, Toyota, Nissan and Honda, but particularly Nissan because of its extremely weakened financial state. And, you know, we also had Nissan downgraded to junk status by the credit rating agencies. It is facing a record debt bill, and that is something that is going to be something that they need to foot and find the money to pay that. Obviously, that's more difficult when their debt is rated at that junk and their borrowing costs are spiralling higher.
All right, Bloomberg's Katrina Nicholas there. Let's take a look at the oil price. We've got WTI ticking up a little bit, although the trend so far this year has been lower. WTI off about 4% year to date, but right now 68.74 a barrel, so still with that $60 handle. Well, let's get some more analysis now of the oil space. Bloomberg senior energy reporter Stephen Stapczynski joining us from Tokyo. So, Stephen, what are the factors pulling down oil prices? How do we see this playing out?
It's Trump. It's always Trump. What's happened is his messaging on potential tariffs on Canada, Mexico, and the European Union is really just deteriorating consumer confidence in the consumption of oil. If the economy doesn't grow, if there's not trade, you don't use as much oil, you don't use as much gasoline. So that's really weighing on things here at the moment. There are other factors as well. Chinese demand isn't looking as resilient, as always, as folks have been expecting. Potential weaker economic growth there kind of removes one of the bullish factors from the market. Oil output from the United States remains very strong. And then that's essentially outweighing the bullish factors. The bullish factors are, you have potentially sanctions from the Trump administration on Iranian oil. So again, it's a Trump versus Trump sort of thing, but it's the bearish sort of element of these trade tariffs winning out. And then also you have potentially OPEC Plus pushing back their planned production increases later this year. Another potential bullish element that's being ignored because of this kind of trade war situation that will really shake the market and risk curbing oil demand.
Just to further support your "it's always Trump" thesis, Venezuela. This is also something that President Trump is looking at.
Yeah, so he wants to take away the concessions that were given for oil, developing oil projects in Venezuela. It was awarded to Chevron in 2022, and that appears to be what he's alluding to in his statements. He didn't clearly call out Chevron, but the dates match up. That would actually be a bullish element for the oil market. If you were to reduce the supply out of Venezuela. Trump is upset because they're not taking their undocumented immigrants from the United States, as well as other issues regarding the government. He's threatening to pull out that concession, and that means that Chevron would have to leave in about 6 months or so. If you reduce that source of supply, that should be bullish for the oil market. Another factor, again, that's being outweighed by just how sweeping this trade war is expected to hit the economy.
Bloomberg senior energy reporter Stephen Stupczynski there. More ahead on the Asia trade. This is Bloomberg.
Well, this week, we're looking into Taiwan's emerging drone industry. Bloomberg travelled to Chiayi County in the south of the island to visit a major R&D centre. We spoke exclusively to the region's head, Weng Chang-liang, on the interest that they're seeing.
Recently, members of the UK Parliament visited to learn about Taiwan's drone development and explore potential collaborations. Vietnam has also shown particular interest in whether our drone technology could contribute to their agricultural sector. And members of the U.S. Congress have visited the R&D center in Chiayi to understand our products and to identify possible opportunities for future cooperation.
That need for a so-called democratic supply chain, and that's really the push that Taiwan is making. We know that the US is already seeking that. Do you see the same level of demand from the UK and also Europe?
I think this will certainly have a significant impact, especially in asymmetric warfare. Drones are small, relatively inexpensive, and they are becoming increasingly useful in terms of telecommunication, target acquisition, and enemy reconnaissance. I believe that drones will play an increasingly important role in future asymmetric warfare.
How do you support companies that have business in China as well, though? Because that's a challenge. If you're a drone company that is still manufacturing or exporting products to China, and you're also trying to be part of this democratic supply chain as well.
The entire drone industry, particularly in the non-red supply chain, is currently under strict regulation in Taiwan. So manufacturing should still be primarily concentrated within Taiwan. Taiwan now can produce 90% of the components in a drone. This means that we will still have issues in the supply chain, and securing components from so-called democratic supply chain comes at a much higher cost, as production is not done on a large scale, but rather through customization. This is the core difficulty we face. Our most critical breakthrough will be figuring out how to open the market and establish organic connections with the global democratic supply chain. This is our main focus moving forward. For example, in the past, an engine manufactured in China might have cost only 10,000 Taiwan dollars. However, if we were to produce the same customized engine in Taiwan, the cost would rise to around 60,000 Taiwan dollars. This stark cost difference is a challenge we must address. The key to reducing manufacturing costs lies in expanding both the supply chain and the market.
Do you think it's ever possible for Taiwan to be able to produce a drone for the same price that you can source from China?
China's drones hold a 70% share of the global market. Taiwan's strengths lie in its abundance of ICT talent. And Taiwan produces the chips that the world desires. Taiwan also has a wealth of expertise on materials science. Therefore, I believe our approach should differ from China's mass market, low-cost drone production. Instead, we should focus on developing high-end and specialized drones. Rather than models for general consumers.
Bloomberg's Annabelle Drew is there, speaking exclusively with Wen Chang-liang, magistrate of Chiayi County in Taiwan. Other stories that we're following from around the world. A South Korean appeals court will rule next month on whether the country's main opposition leader violated election laws. A lower court in November found Lee Jae-myung guilty of making false claims in 2021 while campaigning for the presidency. If that ruling's confirmed, Lee will lose his parliamentary seat and won't be eligible to run in the next presidential race. The European Banking Federation is warning that a proposed dramatic rollback of the European Union's ESG rules will make it harder for lenders to analyse credit risk. Banks have been waiting for years for clients to start providing data points under new ESG reporting rules, but the EU is now proposing about 80% of applicable companies no longer need to comply. Heidi.
Let's take a look at some of the stocks that we're watching when markets open in Hong Kong and Greater China markets as well. Nvidia, of course, remains in focus, right? The solid results kind of falling flat when it comes to the market reaction that we've seen. This is what we're watching when it comes to some of those chip-related stocks in Hong Kong in particular, and also on the mainland as well. That sort of upbeat view of the Blackwell rollout was really the bright spot when it comes to that Nvidia release. We're also watching some of the big banks as well when it comes to China's plans to inject capital when it comes to the big banks of at least $55 billion, and also a lot of anticipation going into the MPC as well in terms of what we could potentially see for supportive economic policy as well. Well, that is it for the Asia trade. Our markets coverage continuing as we take a look at the start of trading in Hong Kong, Shanghai and Shenzhen. The China show is next. This is Bloomberg.